The Bulloch County Board of Commissioners tabled a proposal to issue bonds to the tune of about $84 million to fund phase one of a jail addition project here in Bulloch County. What if there was a way to save $20 to $30 million of interest expense just by issuing a different type of bond, a different type of fixed income security? I believe there is. I believe that type of security would be a Bitcoin-backed bond. And I want to talk a little bit about that tonight because it's a concept that really excites me. It really strikes me as something that would be good for the county and by extension the taxpayers, and would also be highly in demand in the fixed income bond market because there's just nothing out there that's linked to municipal bonds at this point offering that kind of asymmetric upside return and exposure to Bitcoin. Now, there's a lot of people out there talking about that this might be a solution moving forward would be to tie Bitcoin or some form of hard asset like gold into the bonds that we're issuing, the treasuries. But I don't think that anything like that's going to happen. I subscribe to what Preston Pish has said in the past, that he believes that it's going to be more of a ground up thing, and that until they see it working for municipalities, state and federal governments probably aren't going to get involved. Enter Bulloch County and the Bulloch County Jail Expansion Project. I read an article on a local news organization called Grice Connect that was explaining what went on at that meeting. I was not there. I haven't read the full transcript. But apparently what happened was the financial advisors, who I think are doing a good job and presenting a good option, because don't get me wrong, what they presented seemed to be relatively reasonable interest rates in today's environment. They were thinking that we could issue bonds at about 4.3%, and that we could issue these interest-only bonds for, they recommended a 20-year bond that would space out our interest payments to a point that would be manageable, and then that we would still have a prepayment option at the 10-year mark. So let's back up a little bit. Let me explain for any just regular taxpayers like me who are just wanting to understand what is the county talking about here, because sometimes we talk about these big numbers. So when we're talking about millions and millions of dollars, and it doesn't really register for us what we're talking about. So what they are talking about doing is a project that's apparently phase one is going to be a little over $60 million to complete, which includes additions to and improvements to the Bulloch County Jail, which from my understanding is something that we desperately need. So this project's going to get done. It's just how we're going to pay for it, how we're going to finance it. Needless to say, the county doesn't have that money just sitting there in its coffers to pay for it out of pocket as we go. And so what they're going to do, similar to like if you or I were going to be in a building project or to build a house, they're going to take on debt. When you take on debt as a municipality, what you generally are going to do, kind of like a major corporation, you're not necessarily going to the bank and getting a loan or a mortgage like you or I might. What they're doing is they're issuing a packaged security into the market, being sold, a fixed income security that's called a municipal bond or a muni bond. These have some tax advantages too at the state level, but it's a way of issuing debt and selling that debt to get money, borrow money from these bond buyers, these investors, and we're going to use that money to build our project, and we're going to pay interest on that money until we're done, and then we're going to try to figure out how to tax the crap out of you and me and pay back the entirety of the principal. It's essentially what a municipal bond is. The traditional way, and the way it's been done since the first municipal bond was issued in the United States in 1812 in New York, is they've been doing it pretty much the same way. They've been assigning a marketable interest rate that is appealing to investors that can get sold in the open market, and that fluctuates from time to time based on a lot of different factors. But they assign basically a market interest rate to it, or a market rate offering, and then they go out and they sell the bond, and then the proceeds of that bond sale will go to fund the project, and then interest has to be paid according to how the bond is structured and how the legal documents are written up. Pretty simple concept. What I am suggesting, what I would like to see the Bulloch County Board of Commissioners do, would be to engage with alternative professionals who could see if it would be possible to structure a Bitcoin-backed municipal bond. These are out there. You can read about them. They're called BitBonds. To my knowledge, it has not been done at the municipality level in the United States yet, which gives the Bulloch County an opportunity to be an innovator, a trailblazer. And as we'll get into, I think there are massive potential upsides, both for the county taxpayer, and for the investor, the people who are going to be buying these bonds. I think that it just offers a phenomenal risk-adjusted rate of return combined with protection against inflation. So what would it look like? Let's just talk big picture. Again, with a bond, when you issue a bond, it's just debt. So it's basically like you have an interest-only loan, interest-only mortgage. So you're borrowing $50 million, and at 4.3%, and I'm using 50 million just for easy math. Basically, they had said the project was somewhere north of 60 million, and then with interest, you're going to end up pushing 100 million probably. But let's just use 50 million as the principal that you would need with the initial bond offering. Okay, you issue a $50 million bond, and you're offering to pay 4.3% interest. So 0.043 times 50 million. 2.15 million per year in interest is what you would owe in order to borrow and use that $50 million. That's every year for 20 years. So times 20, $43 million in interest expense, plus the original $50 million that you are going to have to pay back. And by the time it's all said and done, you have done a $50 million project for $93 million. Thank you. Of course, all the costs probably went up. The value of that property probably went up and all of that. That's fine. But it cost you $93 million to get that project done at a 4.3% interest rate on an interest-only bond. What I'm proposing is that we talk to experts. I'm not one, but I believe that there are experts out there in the space that could walk us through whether this would be possible to bring to market and whether this would be possible to structure well. A BitBond. What a BitBond would be is, let's just use, I came up with a couple of examples that I'll share in a Substack article. But one example would be to cut the interest rate down to 2%. And instead of using that entire $50 million for the purposes of the building project, you would take and promise to take in the bond. Part of the promise would be, I'm going to put 5% of that $50 million in Bitcoin. And then it's going to accomplish a few things for both the bond issuer and the bond holder. You're going to put 5%, which would be $2.5 million in Bitcoin at issuance. So when that money comes in, the first thing you're going to do is to buy that Bitcoin and set it to the side. Now, what you are now offering to that bond holder, they are buying 2% interest-only payments for 20 years, but they are also buying 100% of the Bitcoin appreciation up to 5% CAGR, 5% annually, as a capped rate that they are going to get. And so they're going to get a pretty impressive above average muni bond return if Bitcoin goes up more than 5% a year for that period. After that capped rate, that any additional Bitcoin appreciation is going to be split 50-50 between the bond issuer and the bond holder. And so let's say Bitcoin returns 10% a year for that 20-year period. Well, the county is going to recognize and get to enjoy that 5% CAGR return rate and get to keep that and put it toward paying off that bond, put it toward other projects, whatever. That's going to be, their money, because there was an agreement up front to split any additional profits over the capped yield rate, to split between the bond issuer and the bond holder. You could also do the same thing with higher Bitcoin exposure, and you might, with that, even be able to offer even lower interest rates because you're offering even greater potential upside. So, for instance, you might could do a 1% interest-only bond with 10% being put in Bitcoin and have the same kind of yield cap and then share any additional profits. Sounds really complicated. For people who understand bonds, it's not complicated. For people who structure these muni bonds, they're going to understand what we're saying. They might think it's a stupid idea, but they're going to understand what you're saying when you ask them, is it possible to back the bond with? Because if you were telling them you want to do it with gold, they would understand it. If you were telling them you want to do it with an underlying stock, you could probably do it. All you're doing is you're putting something in the package to sweeten the deal for the bond purchaser. And that is why you're able to offer a lower interest rate. We already know this works. This is already being done because this is similar, not exactly the same, to what Michael Saylor is doing to a higher risk level. But it's what Michael Saylor is doing with the company Strategy, formerly MicroStrategy. He's able to issue corporate bonds into the market, and they are being bought. He's able to issue them at 0% interest. Why are fixed income investors buying a bond that doesn't pay any interest? Well, because he is giving them convertibility into his common stock. And they know that that convertibility into the common stock is valuable because if Bitcoin goes up, strategy is going to go up exponentially more. And so he's giving them proxy Bitcoin exposure within a fixed income wrapper, within a fixed income instrument that many funds and many investors, that's all they can buy due to their investor mandate of their fund or their so this could be pension fund, hedge funds, mutual funds, ETFs that they might have restrictions to where they can only buy bonds. Here's the cool part. There are some that have to allocate a certain percentage to municipal bonds. So there's already a market, a very big market that has to and wants to invest only in municipal bonds. But what you could give them, what Bulloch County, Georgia could give these fixed income investors that are buying muni bonds, they're going to buy them anyway. You could give them the opportunity to have Bitcoin exposure by packaging it as part of your bond. And what they're going to give you in return is they're going to let you have a lower interest rate. That is the big deal. You can save the county taxpayers on interest just by investing part of the bond buyer's money in Bitcoin and giving them the first share of the returns. So they're going to get interest. They're going to get probably the first, call it 5-6% of the return. And then after that, returns could be split 50-50. Here's where it gets really crazy. So that is obviously a good deal for the taxpayers. If that can be done, I cannot think of a reason why Bulloch County would not want to do that and save $20 to $30 million in interest for every $50 million spent on a project like this. I cannot understand why we would not want to do that. But as if that wasn't enough, Bitcoin has returned over the last decade over 80% per year. Over the last 5 years, it's over 70%. Its worst 4-year period, 15%. So what we're talking about seeing over a 20-year period, if the bulls are right, if people who believe in Bitcoin, like myself, are right, and Bitcoin keeps going up at 20, 30, 40% per year during that period, what's going to happen is the county is actually going to make money on this project. Because in sharing in that Bitcoin upside, it is possible that they could fully cover the $50 million principal, the interest, and then some. If you look at something like if you model this out over 20 years and you say that Bitcoin's going to return 30% per year on the 2% interest bond with 5% Bitcoin backing, the county, after paying back the principal, all interest due and everything at the end of that 20 years, the county would have made $130+ million due to Bitcoin exposure. But remember, it wasn't the county investing in Bitcoin. It wasn't the taxpayers having their money taken through taxation and put into Bitcoin with hopes that it goes up. No. All that is happening is we are decreasing our interest rate by selling a prepackaged product to a market that wants it. And we're using their money to buy the Bitcoin at the beginning. Guys, I know it seems complicated. I know it seems out there. And I know you hear Bitcoin and so many of you are like, it's fake internet money. It doesn't matter. Bulloch County taxpayers would benefit from this. Period. End of story, no matter what happens to Bitcoin. Bitcoin blows up. Bulloch County taxpayers benefit. There is a market for this. It has not been done before. But all great things have not been done before until they're done. So be bold. Let's reach out to professionals in this space and say, what do you think about BitBonds? Would it be possible to do a Bitcoin-backed portion of this bond and get the interest rate down? See what they think. If they say no, let's go to some different professionals and see what they think. I'd love to talk about it. I'd love to get your feedback on this. Reach out to me anytime. Comment. Let me know what you think. If you're not from Bulloch County, doesn't matter. Comment. Let me know what you think about a small rural county utilizing something like a BitBond to save their taxpayers interest expense and to share in potential asymmetric upside in Bitcoin. Have a great night, guys.